Welcome to Adda 24/7. We are in Achievers MCQ series for BFM. This topic is the most important topic from Reserve Bank perspective and BFM perspective. Objective questions on qualitative measures of credit control. Very difficult one, to be frank. Qualitative measures. There are two types of measures. Okay, I'll explain everything. Follow this video till the end. Okay. Firstly, I would suggest download Adda 24/7 app on your mobile. In this app, you'll be getting all the premium study materials, plus current affairs, job alerts, live classes, ebooks, tests. You all require this much only: books, notes, tests, and classes. That much is enough. So download it immediately. Also, subscribe to Officers Adda 24/7 YouTube channel. In this channel, you'll be getting two things. Number one, all the latest updates on JIB and CAIIB. Number one. Number two, you'll be getting the free YouTube series on this channel. Now, what is free YouTube series? Right now, what are you watching? You're watching it on the same channel. Free YouTube series. So, similar YouTube series are available on all the topics. Okay. These are the two new batches just now started for this CAIIB. All the four subjects are covered: ABM, BFM, ABFM, BRBL. Okay, 80% discount, double validity on Mahapacks. What is Mahapack? 15 plus batches on each and every subject. Okay, so join it ASAP. Use the code Y432. More on this later. I had given you homework yesterday. Okay, what was the homework? Say this, yesterday's homework. What is open market operations? So that was a question yesterday which I had posed. Okay, yesterday also we had a topic on credit policy only. Important topic. Kindly follow that video. Okay. Yeah. So it was a good topic actually. There were certain objective questions which were new. So that's why I say follow this series on a daily basis. Okay. So what is an OMO? Open market operations. Outright purchase or sale of government securities by Reserve Bank. Outright sale of government securities by Reserve Bank. Outright purchase of securities by Reserve Bank, and none of the above. Means A is both purchase and sale, B is only sale, C is only purchase, and D is none of the above. So what is the correct answer? Who can give me? Yeah, I've seen many correct answers over here. It's both outright purchase and sale. Both of them is done in OMO. Okay, remember this. What is the opposite of OMO? There is another. Okay, let me see how many of you can answer. What is the opposite of OMO? In OMO, we do both purchase and sale. Okay, there is one strategy in which only sale is done. Only sale. So that is known as what? MSS. Kindly search on this. Okay, market stabilization scheme. Search on this, you'll get the details over here. There are many things which are to be studied. Okay, so let's move to the today's topic. It is here. We are focusing on qualitative measures today. See here, there are two types of measures in credit control. What is credit control? Firstly, credit control means what comes out through RBI's monetary policy every 2 months. Okay, monetary and credit policy we call it actually. Monetary and, let me write it full, otherwise many of you will get confused. Credit policy. Whatever RBI proposes every 2 months, that is called as monetary and credit policy. Now, there are two measures in this policy. One is quantitative measure, second is qualitative measure. I won't focus more on quantitative today because our topic for today is qualitative. Quantitative someday else. Okay. So, quantitative measure, I'll just give you a brief. Okay. Quantitative means what? Which can be measured in numbers. In numbers. Like for example, look at this, CRR, I can give the number for that. SLR, I can give the number for that. OMO, OMO is again buying selling in numbers. Then bank rate, I can give the number for that. Nowadays this bank rate has been merged. Okay, remember this. Something new addition for you. Can somebody tell me this bank rate has been merged with what? Means RBI has merged this bank rate with one rate. That's called as, anyone knows? Let me see. It has merged with MSF. Okay, shall I write it over here? Okay, MSF. So that what happens, you don't get confused over here. It merged with MSF. Okay, marginal standing facility. Now what is that? Yesterday's video I have covered this. Okay, follow that. Then repo rate, I can get it number. Reverse repo rate. Now reverse repo rate has also been merged. Many things have happened in are happening in this world. Okay, SDF, it has been merged with SDF. Okay, yeah. Standing deposit facility. Remember these two words. Top it is MSF. I'll show you simple logics here. It's like this. Whenever RBI issues that policy, monetary policy, it has basically two maxima and minima, upper bound and lower bound, upper limit, lower limit. Lower limit is SDF, upper limit is MSF, and in between somewhere lies this repo. Repo will always be between these two. Always remember this. Okay? Yeah, MSF. This MSF has been now, this bank rate has been aligned with MSF. Okay? So now these two are same only. Yeah. Chalo, move on. Move on. Qualitative measures. See this. Qualitative measures include, here you can't give numbers over here. Sure. Everywhere over here in quantitative you can give the numbers. Bank rate you have a number. Repo rate you have a number. Reverse repo or SDF you call it, you have a number. MSF you have a number. Credit rationing, you can't give number. What is rationing? I am having the details of these will be covered in the questions now. Okay, you can give a number for rationing. Consumer credit control, do you have any number for that? No, that is again a qualitative, you can't quantify it. Margin requirements, okay, moral suasion and direct action. So these all elements which can't be numbered, which can't be measured in numbers. Measured, okay, which can't be measured. So I'll put a cross on this. These can't be measured and these can be measured. These can be measured, okay. So these are called as quantitative, which can't be measured are called as qualitative. So remember these 5 names. What are these again? Credit rationing, consumer credit control, margin requirements, moral suasion and direct action. Okay, we'll study each one by over here now. Before going ahead to the question answer session and the details, I'll just remind you about these batches. Remember, 80% off is going on, double validity on Mahapacks. Use the code Y432. Okay, Y432. In this you will be in this code, you by using this Y432 you will be getting huge discounts over there. Okay, yeah, let's move on. Rationing of credit is a method by which credit central bank seeks to. So rationing of credits here, firstly I'll go step by step. Each one will be having 5 questions over here. All of these 5 are related to credit rationing, consumer credit control, margin requirements, moral suasion and direct action. I'll explain one by one, but I'll first get it from you. And if you don't understand, and then I'll definitely give the explanations. But let's start the first one now. Rationing of credit is a method by which central bank seeks to, means what does central bank do or RBI does in this rationing of credit? Number 1, limit the maximum amount of loans or advances. Okay, limit the maximum amount of loans or and advances. So does it give the method of limiting the maximum amount of loans? So here it will tell this, any commercial bank, you have to give maximum loans for this sector up to this amount only, because there is a problem in the whole sector as such. Can it do so? Yes, it can do so. By fixing ceilings for specific categories of loans and advances, means it will fix the limit, maximum limit for giving some maximum amount of loans. Okay, so is this the answer? Yes, this can be. Distributing money on the ration cards. What is this? Ration card, many of us are having those ration cards. So does RBI distribute money on these ration cards in rationing, or only A and B? What is the answer? Yes, or only A or only B. It can be anything. Limit the maximum amount of loans and advances and fix the ceiling for specific categories. So it is actually D. Okay, maximum amount of loans, it is to be limited by RBI, and fixing the ceiling means what is the, again it comes to the same one and the same factor. Okay, maximum ceiling is to be given for certain sectors. Okay. Consumer credit control is a monetary policy tool used by Reserve Bank too. So consumer credit control, what is this concept? Consumer credit control. Let's see. Control the demand and supply of money or liquidity in the economy. Means does consumer, firstly understand this. Consumer credit control means what? Whenever there is a high inflation in the economy, then RBI tries to control that inflation. How? So these are the measures. Let's see one by one. Control the demand and supply of money or liquidity in the economy. So demand and supply of money is controlled by RBI or liquidity, both of them. Okay. Number 2. Control the demand and supply of money in the economy but not liquidity in the economy. Means it is only focusing on demand and supply but not liquidity. And A says what? Demand and supply, I'll just write it over here. Demand and supply plus liquidity. Okay. In fact, they mean one and the same only. Okay. Here demand and supply and no liquidity. Okay. I'll just cross this. And here control the liquidity in the economy but not demand and supply. Means liquidity it is there but demand and supply not there. And what is this? Consumer credit control. So D is something related to credit cards. Means is it related to credit cards? This is outright out. Okay. Now only the question lies is A, B or C. Which one? So under consumer credit control, will RBI control demand and supply and liquidity or only one of them? It has to control both. Okay. So it is control of demand and supply or liquidity in the economy. In fact, both mean one and the same. If you have more demand and means if you have more demand but less supply, then the liquidity will be dried up. If you have more supply but less demand, then there will be huge liquidity in the market. So it roughly means one and the same only. But in the exam, if it comes, the answer is demand and supply or liquidity. Okay. As per the margin requirement guidelines of RBI. What is this margin requirement? Remember this? What did we study right now? What did I tell you? These three, see this. We are going as per the sequence. Credit rationing, consumer credit control, now margin, then moral and then direct. Okay. So margin, it is a qualitative measure. Okay. So as per the margin requirements of RBI, all standardized OTC derivatives should be traded on exchanges or electronic platforms wherever appropriate. Means all the, what are OTC derivatives? Over the counter. Remember this, over the counter. What do you mean by over the counter? See here, it means like this. Over the counter means, let me give an example of loans which we give, loans. Okay. Loans means for each customer for let's say commercial loans, any factory loan you give, MSME loan we give, for each customer the rate can be different. For one customer the rate can be 9%, for other customer it can be 9.5%, right? For someone else it can be 8.5%, depending on the volume of that customer and the relationship of that customer, right? So when you have different rates for different customers and or it is, we call it tailor-made. When you have tailor-made rates for this customer, it is called as the OTC product. Okay. It's like depending on your customer's preference and the relationship with that customer, you change the rates. So that is called as OTC. All standardized OTC derivatives should be traded on exchange or electronic platforms wherever appropriate. B. All standardized OTC derivatives should be cleared through central counterparties. Now what is the central counterparties? See here, what does it mean? All OTC derivatives need to be cleared through central counterparties. Now this is one which you have studied, CCIL, Clearing Corporation of India. Okay. So CCIL will have to clear all these OTC derivatives. Non-centrally cleared derivatives should be subjected to higher capital requirements. And also these derivatives should attract margin, higher margin requirements. Okay. Means what? Those which are not cleared through A and B above. See this. They are to be cleared through electronic platform. Which are not cleared through A or even B. Then the margin requirements for them which should be higher. So, and all of the above. Now see here. This question is mainly informative to you. Okay. I know many of us have not dealt with these products at all. So remember, I'll tell you the answer. Okay, let me guess the answer. Let me check how many of you can guess the answer on, because this is also an important art in the CAIIB exam. How many of you can guess the answer? Many of you, I know many of you don't know. Obviously, you have not dealt in OTC derivatives, you have not dealt in CCPs, okay, and non-centrally cleared derivatives, you have not dealt in that. But can you guess it from A, B, C and D? Quite simple, isn't it? Because guesswork is also important. D, all of the above is the answer. Why? Because remember, margin requirement means it is mainly related to the bonds, okay? Mean the bonds which are directly traded by the banks, okay? Derivatives which are directly traded by the banks between themselves. So what does RBI say? RBI says here, I'll explain you over here. RBI says if there is one bank, this is bank 1, B1, okay? And this is bank 2, B2, okay? So if these banks want to sell and purchase, okay, any type of derivative between them, derivative means here, derivative includes options, swaps, everything, mainly swaps here. Whenever banks deal with each other, they mainly deal in swaps, okay? So if they want to deal with swaps with each other, RBI says you don't deal directly with each other. Don't deal like this directly without knowing anyone. Bring some third party in between, like this third party is called as CCIL, Clearing Corporation of India. Bring this party in between so that there is a third party who checks whatever you are doing. Because after all, if tomorrow something fails, then it's after all your customers who will suffer. It's not the bank which suffers, the depositors of that bank who suffer, right? So that's why this is the main point over here. This third party is always, we call it exchequer also, okay? Now I told you one word about swap. What is swap? Remember, I'll just explain you a simple word about swap. Swap means what? There are two legs into this. One is fixed and second is floating. Fixed and floating, okay? I'll give you a simple example. If I take, let's say, 1 lakh rupees from you today, 1 lakh rupees, and I guarantee you 8% rate of interest, okay? So what am I doing? I'm taking 1 lakh from you, but you are getting 8%. But obviously, now what will I do with that 1 lakh? I will invest that 1 lakh in stock market. Now in that stock market, I can get, let's say, 50% returns also. I can get, let's say, 0% returns also. So that leg is floating. But what I am giving it to you is fixed, isn't it? So that is meant by swap. In swap, always remember one leg is fixed, other leg is floating. Okay. Moral suasion refers to, what is moral suasion? Firstly, what is suasion? Suasion means persuading somebody or telling somebody to do something, strongly telling. Okay. So moral suasion refers to type of influencing procedure which applied by central banks, means influencing procedures. Here again we are talking of influencing, telling something. Okay, this can't be measured in numbers. Okay, that's why this is a qualitative measure. B, to keep the pressure on the commercial banks in order to abide by the monetary policies that are established. Now look at this, whatever we are speaking over here. Pressure on the commercial banks. Pressure means what? Commercial banks means what? All these SBI, PNB, whichever banks we are working in, okay? All these banks are commercial banks. Even private banks are commercial banks, except cooperative banks. Cooperative banks are not commercial banks, okay? Yeah, coming back. So, moral suasion refers to keeping the pressure on the commercial banks in order to abide by the monetary policies. So, the monetary policies is to be stuck to, is to be followed in toto by the commercial banks if they have to function properly. But what happens? Many of the commercial banks in a run or in a competition for profits, they sometimes deviate from that policy. So moral suasion refers to this part also. Pressure on those banks, don't deviate from that policy. Okay. C, it is carried out by transferring speeches, seminars and meetings. Is it so? And all of the above. Now let me check how many of you can guess. Okay, A seems to be correct, isn't it? Influencing the procedures which is applied by central bank. So influencing the commercial banks. Okay, See here, RBI will always try to, RBI, look at this, RBI will always try to influence whom? Who are under its control? Who is under its control? All the banks. So RBI will always try to influence these banks, right? So influencing this seems to be correct. B, keep pressure. So this also seems to be correct. So A and B are correct. So if A and B are correct, is there any option of A and B? No. So if A and B are correct, logically C will also be correct. That's why the answer becomes all of the above. Got it? And actually C is correct. It is carried out by transferring speeches, seminars and meetings. Remember, qualitative measures, all the qualitative measures, let it be moral suasion, let it be this margin requirement, let it be the other ones also. All the qualitative measures cannot be quantified by RBI, cannot be given in numbers. It can only be transferred through speeches, seminars or their papers, okay, research papers. It will tell the banks, means it can guide the banks. It can't tell the banks directly that don't do this. It can't tell. Okay. So that's why all of the above is the answer. So moral suasion refers to influencing, pressure on the commercial bank, and is done through speeches. Got it? What is direct action by RBI? Now this was the fifth measure, right? Direct action by RBI. Means what? You might be understanding the words over here. Direct action means take action on this bank, take action on that bank. Why? Because it's not functioning properly. That's the main meaning of this. So let's see the options. Enforce both qualitative and quantitative credit controls. Enforce means you have to do it. Remember, enforce means you have to, there is no other way. Taking the stick in the hand and you have to do it. So A can be the answer. Yes. Directions issued by central bank to commercial banks regarding lending and investment policies. So directions means here, it means always these are direct. Direct means direction. Remember the word direction means directing somebody. Means you have to do it. Again it's enforcement only. Adopted when some commercial banks do not cooperate with the central bank in controlling the credit. So that's why. Remember, direct action is not taken by RBI on all the banks. It is always taken by the by RBI on those banks who don't cooperate or who deviate from the policies. So C can also be the answer. So A, B, C, all of them are correct. So the correct answer will be obviously now what? Yeah, it is D, isn't it? All of the above. So remember, these were the 5 measures: direct action, moral suasion, margin requirement, consumer credit control, and rationing of credit, right? So these 5 measures, you remember it by heart. Okay, got it, everyone? Everyone clear this concept? Because these 5 measures are only asked in exam. Quantitative measure will cover it in another lecture. Let's say tomorrow, day after tomorrow, someday. Tomorrow, let's say, okay? Let me try tomorrow or day after tomorrow. So we'll cover it in these 2 days. So that's why I say follow these on a regular basis, because we can't tell you when we'll be covering some topic. Okay? Okay. Chalo, one for your homework. Which one among the following institutions have to maintain CRR? Who has to maintain CRR? Scheduled commercial banks, NBFCs, urban cooperative banks, state and central cooperative societies. Select a correct answer. A, B and C means, A means what? Scheduled commercial banks, NBFCs and urban cooperatives. A, C and D, scheduled commercial, urban cooperatives and state cooperative societies. A and C only, scheduled commercial and urban cooperatives, and all are correct. So what do you think? Tomorrow I'll answer. Okay. In the meantime, you try. Who has to maintain, who does not have to maintain CRR? Just try it yourself. Okay. Let me come back to this session, to this code Y432. How to use this code Y432 and get maximum discounts. Okay. In these batches, we are covering all the important topics, all the 4 subjects, and on that all the important topics: question bank, this case studies, numericals, one-liners, everything we are covering. So join these batches ASAP. Now I'll tell you how to use the code Y432. Let's go to Adda 24/7. Okay. Okay. Let me bring you to Adda 24/7 live. Okay. If you are having the app, go on the app, because I would suggest you go on the app. Not if you are having. Everyone should download this app. okay, because you are getting 1% extra over here, remember, okay. Now once you go to Adda 24/7, you click on Adda 24/7, then click on JIB and CIB. Now look at this, click on CIB 23. In CIB 23 you will see the batches, okay. Click on this English batch, okay, English batch, then click on this, all the details, 20th Feb starting date, their timings, days, everything you will get it over here. Recorded videos are available, so if you join now also, and if you have missed some some classes, you can get the recorded videos for the same, not an issue. 2 interactive classes, okay, so you can ask the questions there and then itself. Ebooks are available, isn't it? So everything is available, go for it. Now let me come to the fees part. 23,999, click on view offers, put the code Y432, Y432, click on apply. Now look at this, 23,999 reduces to 4,799, 80% off you are getting, such a huge discount. So grab it now. Remember, this offer won't last long. In fact, I would suggest, as you have the offer, go for this Mahapack. Mahapack means what? 15 plus batches per subject, okay. And let me show you, see this, go to JIB CIB Mahapack, look at this, click on CIB ka Mahapack. Now look at this, you are getting validity of 6 plus 6 months, 12 months validity, and look at the fees. Okay, again see here, 15, you can read this, 15 plus batches are available, then all the ebooks are available, everything, recorded videos are available, that's everything is there, okay. Look at the fees, 35,996, click on view offers, put the code Y432, Y432, click on apply. Now look at this, okay. Now look at this, 35,996 reduces to 7,199, and that also for 12 months. 7,199 divided by 12, do it. It comes to what? 600 per month, 600 divided by 30 number of days. So you get per day 20 rupees. So you are, what is the amount you are giving per day? 20. How much do you spend on your tea breaks in your bank on a daily basis? Okay. So that is the point. This is an investment for lifetime. Okay. This will fetch you long-term results. Two increments, isn't it? Go for it immediately. And in how many months will you recover? Once you clear the CAIB, this you will recover in what? Hardly 6-7 months, isn't it? So go for it. Immediately go for it. Okay. I'll be back tomorrow with another series. Till then, bye. But before going, let me show you the portion. The portion for CAIB has changed. Okay. Look at this portion. ABM, BFM, ABFM, 2 new subjects, and BRBL. These are the 2 new subjects. Okay. So that's why you'll be needing the classes. Electives, no retail elective now. Rural, HR, IT, central and risk. Okay, no retail. Negative marking is gone, but subjective questions are there. Okay, I'll be back tomorrow with another series. Till then, bye. Do join the batches.